Hello? Okay, I think I'm live. All right, so this is not. That's. What is going on here? Right. Hello. I am sorry for the 4-minute delay. I hope that you guys are still here. I know I have 7 viewers already, and that is fantastic. So welcome to Market Munch. This is my podcast that I am going to be talking about because it is after market hours, because during market hours, I still have a full-time job. And in this day, I wasn't able to post on Patreon because there was a flood in the building that I was in. It wasn't severe, but it was just a lot of leaking water, and it was a lot of things to take care of. So I will be on my Discord, and priority goes to Discord in terms of the messages that I receive here. So in this VIP chat, I am letting people know that I am live. Head to my YouTube. I know I'm just setting things up, but if you want to ask questions, I will. Oh, I didn't do that right. At everyone. But it may be a little bit late where I am, but it is. All right. I need to grab the link for my broadcast, which is right here. Market Munch, episode 1. So here I am playing myself here, but that's okay. I need share. The link for my broadcast, which is right here. Market Munch, episode 1. There we go. Done. So here I am. I'm using StreamYard for my setup. It is a browser-based setup. Hey, Plaza, hi. And also, Alex, I hope you're still here because you said all 17 minutes. 8:13. I'm sorry you had to wait a little bit more, but I hope you didn't sell your loss and get out before I showed up. So here, how is everyone doing? I will share this directly to the Discord. There's people who are already watching. Thank you. So I will head to, where is memes, VIP chat, YouTube, welcome. There is a live questions chat in my Discord. I will link the Discord as well into the description, but if you want to enter this broadcast, it has been posted into the Discord at everyone in this chat. I've blasted that out. So if you wanted to join the YouTube call, you can look at that. It is a live podcast called Market Munch, mainly because I like to snack and it is way past supper time for me. But if you want to ask me questions, priority goes to the VIP Discord, because that is the people who are signed up to my Patreon. If you don't know what the Patreon is, it is just a place where I post information. And if you want to see the research that I post on YouTube before I post it on YouTube, then you can follow me on Patreon. You can do with that information what you like, because even the higher tiers of Patreon, where you're paying $25 to have a video call with me, anyone who's had those calls, the problem with not being able to join VIP is you have to click the Discord link through Patreon. And it is a new Discord link that you have to be sent through Patreon. And once you get that source from Patreon, then you are automatically upgraded to the VIP section. But it is a new link since we upgraded, and there are people that I will be bringing onto this call who are going to be the new moderators to the Discords. This is where we get this podcast, The Market Munch, and I need to contact them on Facebook to see if I can bring them into this call. So, Facebook. So if you guys follow a similar Discord called Rags to Riches, this is a Discord full of people that I very much so admire because they have developed an accidental following similar to me, and I'm helping them out with their Discord, and they're helping me out here because I don't know very much about Discord. We are live, giving them paste. So now that the people that want to call in here, I can call them in, or I can screen share and do Discord, but I want your questions first. So if you have any questions, Fire still down while Tilray and Hiddy Affy are up 10%. So like I've said before, Fire has put $30 million as an FTM. FTM is they created $30 million. Yes, your Plaza, I acknowledge your question, as well as Huang. You're both having questions about Fire. I have posted before, and this is a FTM that is essentially Fire has added $30 million to its market cap. So Fire has gone down because there's $30 million of unclaimed shares that were just added. FTM means that this company is fully confident that all of these stocks, that 30 million in funding, will be provided by the retail investors like us. The Fire has followed a cycle. So I will do screen sharing to show you this cycle of warrant buys. Warrant buys are essentially Fire will pitch to a company, hey, I want to release this many shares of my stock, and I want to be secure in my in these fundings, this funding that I want to raise. So you pitch to a company that's a larger holding company. We'll get to luck in a second. Thank you, Debbie. So a larger holding company gets pitched by Fire. Hey, here's our initiative that we are pitching to you. This is insider information because we don't understand what their news is that they're pushing for until this pitch is succeeded. So the pitch that they're running out to the holding company is essentially, hey, these are our initiatives. Fire is working on THC beverages, which are huge, and they are on the short list for THC beverages. I can link that in the description once we are done going live, and I can update my description based off of what happened during this live call. And then from there, we have Fire pitches the idea to a holding company, and that holding company says, okay, well, if you want to do that, and we need to provide you with $30 million, this is for a warrant buy. This is not an FTM. There's a difference, and I will explain that, but I need to explain warrant buys. So after the pitch meeting, they come to agreement, and the holding company says, all right, so I will give you $30 million of funding only if you give me this stock at an under market rate. So this automatically brings the average of the stock down, but it also automatically gives guaranteed funding, or almost guaranteed funding, to this company that they will be able to use once this contract is up. Warrant buys last a long time because if these holdings companies that had millions of dollars invested all at once, that would average down the stock and cause it to crash and cause panic selling. So they have a window between, say January this year until July this year to buy up $30 million of new shares at this price. So this increases the market value or the market cap of the stock. And that's what a warrant buy is. It can be unbrokered, it can be brokered, it can be many different things. But the main thing that happened before with Fire is that it had these warrant buys. The warrant buys were pitched and they were successfully passed. And that was something that a holding company trusted. And these holding companies have a promise themselves to say, I will buy this stock for $30 million. And after I finish those warrant buys, as long as there's no breach in this contract and there's nothing wrong going on, you will have that $30 million to be used at your whim to better your company. And we promise to hold this stock for the next 3 years. So if you have a warrant buy, you have guaranteed diamond hands for however long that contract lasts. So you don't have to worry about these people on Facebook pages sending you emojis saying it's going to be held forever. You have a holdings company that is committed to a contract that says that they have to hold. The difference is here with FIRE, they added $30 million straight to the market. Because if you noticed 2 weeks ago when you were buying FIRE, you might have set a limit buy for 0.27 and it went below 0.27 and you got it for 0.26, but you only got 500 shares out of the 1,000 that you bought. That's because there were not enough shares of FIRE on the market. It was going down because there were news of this FTM where they add market shares to the public, and FIRE finally trusts after a cycle of 3 warrant buys that caused FIRE to go from 16 cents to 23 cents, then back from 23 to 18, and then from 18 to 30 and down, and then back up to 50. Now it's starting this FTM, which is instead of pitching to another company, what they're doing is they're adding $30 million to the market cap. That automatically takes the stock down. That's why I was talking about how FIRE has never broken the support of 0.295 cents for the past 3 months or whatever. Once they released the FTM, which added $30 million of unclaimed stock directly to the stock market virtually all at once, they are trusting the market to buy up those stocks because they've realized that there is demand. So they are just putting it out there because they trust us. And people are saying to me and sending me messages saying, FIRE is releasing nothing but good news. Why is it going down? Is this the subject of shorts? It is not the subject of shorts. It is because there are $30 million of unclaimed shares. This automatically brings the shares of the stock down. When you sell shares, that does not mean there's somebody on the other side buying shares. You're selling the share, which means the share that you sold is no longer has value for the company. When you buy a share, you're putting money into the company that company uses at their own discretion to better their own company. That is why people say that the stock market, the price of a stock is baked in. So the next 3 months, the next 6 months are already the evaluation of the stock because people invest on hype, which is exactly what is happening. These companies open up to the stock market, not because they want people to invest to make the other people money. It's so that anyone can give this company money. And that money that you give to that company is used at their own discretion to improve the company. So if you are being promoted a stock on Facebook and you have no idea what this company does and you do not believe in what this company does, you are giving money to a company that you don't know anything about. If you had a friend that asked you to loan them money, you might loan the money. But if they didn't give you a return on that money, would you continue to lend? Yes, no, who knows? But if there's a continued pattern of losing money from this friend, you should probably stop putting money into it. You are putting money into a company, and that money that you're putting in is being used directly by that company to create value for the stock. If you are losing money, then that means that stock is losing value, and that company is losing its value. The correction that we have is entirely based on speculation because these stocks during the stimulus bull run that happened throughout this year caused a big shakeup in the market because there were huge increases throughout the entirety of this calendar year. It was one of the fastest bull markets we've had. It's not the largest or longest bull market we've had. The problem is the crash happened due to COVID. It was due to people's uncertainty of all of these companies that had intricate office buildings that still relied on people, that a lot of people didn't understand, that most individuals understand how to work from home. More people have access to cell phones than they have to clean water. People can work from home because you see advertisements from working from home long before the pandemic. And now those advertisements have gone off the world because everyone's working from home. You can make $10,000 working from home right now because you might have a $10,000 gig that you're promoting that you forced to be working from home. So now those ads that say you can make $1 million on your laptop don't necessarily work. But this bull market that we've had, it was almost impossible to lose money because the stocks went all the way up and they came down so quickly because everyone decided, I'm getting out of the stock market. I don't know what COVID's going to do to these stocks, so I sell everything. And the problem with that is, after all that happened, everyone was locked inside. A lot of people were, trying to find something to do. Lottery tickets in Canada were canceled during the pandemic, which makes sense. They don't want people gambling when they only have a stimulus check coming in. So what's the next best thing to gambling? The stock market. Even though people say that, it can be a sure thing investment, it's very possible that you could lose your money. And many people are getting a taste of that within this February and March. And that is the correction that's happening based on the price that has been baked into the stock market for the next, 6 to 8 months, that usually the stock market has the projected value. Like, people are buying solar companies right now because, well, it's going to be summer soon. So a solar company is going to be installing more solar panels. So that means that it's going to do better in the summer. That is not accurate because people are buying into a stock, and buying into the stock increases the value of the stock. It does not mean that this stock has more value inherently as a company. It still couldn't be overvalued and undervalued. But when we have too many investors jumping in on a stock because of this correction and because of COVID causing more people to get into investing than ever, you have people like me who accidentally created a following. So all of you that are here in this chat that have stopped asking questions because I've been talking for too long, and maybe there are more questions in the Discord, I want you to know that this live stream, all of this Patreon, that yes, I am making money off of it. I can fully disclose that. However, it happened by accident. I shared my information and people liked it, and I created a YouTube channel because a lot of you lovely, incredible people promoted me and said I should. And luckily I had a background in theater, and I always wanted to do YouTube anyway, but I was going to do sketch comedy and all this sort of stuff. But this makes sense. I can talk to you. I can talk about the research that I do, and I can figure out what is happening in the market because I did psychology and English in university, which gives me the ability to explain things in informational packets. So it's not that my research was better than anyone else's. It's that my research was comprehensive. Anything on with Leaf, thank you. So I am looking at VET, Luck, and BOC. I will look at those a little bit later, but what I want to talk about now is the dangers of Facebook and Discords and all of the things that you are in right now, including mine. There are hundreds, if not millions, of people who started on the stock market just days before you did, weeks, maybe a month. You've seen people post good research and you've started following people like me. There's also a lot of other people like me who have a following that they did not try to create. And that is dangerous if they don't understand what's going on, because there's people like Dan Lok who created a cult of people who follow and bid in and lose a lot of money on their stocks. I purposely make sure that everything that I say is background checked and make sure that, nothing that I say can be taken as financial advice, because I do not provide that. And I let you know right away, this is my research. This is my opinion. I say the word buying as in I'm buying the stock rather than saying you should buy this anymore. I made sure that there is no reason for that. There are a lot of people out there. I'm not saying that they're wrong or that they can't read charts, but I've been added to so many Facebook pages, so many Discords, so many things within the last start of that market crash of people who are getting the first taste of red that they've seen all year. And they have these followings of people, hundreds, possibly thousands of people that look up to them because they thought they were good at reading charts, because they didn't know that they were wrong. They didn't know that the moment they started investing just when COVID started was the time when anyone could have invested and made a lot of money. So I go into these new Facebook pages, these Discords, and they come to me with the prospect of saying, hey, you could possibly get paid for this. If you provide your research, maybe you will get paid. I go in and I say, hey, I'm just going to observe and see how you're posting things. And I'll post a couple things. And in these Discords and in these Facebook groups, I do make a couple posts. And I see the nature of the calls that are happening. All of these Facebook posts, Facebook pages that are devoted to one single stock, like AMC, ZOM, whatever one, get out of them. These are people who are deluded to the point where they believe that this one stock is going to save their lives or save their portfolio, even though it's just a bet, even though it's just something that you believe, yes, the stock has value because you've been convinced by a lot of other people that it has value. And now that you have a bubble of people that are within this investment and all of the people who are saying have diamond hands, hold on to this stock, while a lot of people in that group are just seeing the market sentiment and understand when the stock goes up and how the stock goes down. And they're buying and selling and day trading on your pretend diamond hands. Because the amateurs who have been reading the stock and didn't realize that they've been getting things wrong. I'm not saying I'm not an amateur. I'm just saying I do research into the financials of companies. I cover all parts of the board. And they've created a following that has only now started to lose money. I am also a culprit of that. I've made some bad calls, but I am very quick to say these are bad calls. Get out of them. At the beginning of the market crash was the first time I revealed my entire portfolio because I sold next to everything in the last week of February and gave you screenshots of this is all I have left. These are the only stocks I have. I've sold everything else regardless of profit or loss and said, that's it. Do with this information what you will. Because I cannot babysit people's sells. I say what price I'm going to sell at, and I say what price I'm going to buy at. And you can listen, you can take my research and learn from it and use that as a launching point for your own research. The purpose of my calls is to make sure that you don't need my calls anymore. If you take a video chat with me, it's mostly just us talking about the stock market and talking about your picks. If you send me a screenshot of your portfolio, I can take a look at it and say, do you think you believe in this stock? I wouldn't be investing in this stock. And I can totally help you and we can talk about the market and that makes sense. But the people who have these Discords, these Facebook pages that are created and they behave like a cult. They say, what's our next move? Where are we moving next? What are we doing? What's our next move on the market? These people on Twitter who are telling you, hey, you should buy this stock. They've already bought the stock before they tell you about the stock that they're buying. Regardless of whether they're trying to manipulate the market, they will be the first to buy and the first to sell, not because they're selfish, but because they saw the thing first and now they're going out to a following that every person who sees that thing late buys late and has a higher risk and lower return. If you see a stock that has gone up 20% in the last day, do not invest in that stock unless you see a trend that says it will continue to go up. If you have a stock that has gone up 20% in one day, it is fully capable of going down 20% in that same day. So why would you invest in that way? Because of all of this hype. If you keep listening to people who say this stock, there's common sense that people say isn't too common. I'm sorry, I'm playing with things on my desk. I realize that it's a little bit problematic here. So I'm going to go into Yahoo Finance, and I'm going to show you the simplest way to understand if a stock is overvalued. So I'm going to share my screen. Share screen. Application window. StreamYard. Done. So Yahoo Finance. You know, I'm using Bing right now. Don't judge me on that. That's just where it is. So you can search up pretty much any stock on Yahoo Finance. It doesn't matter whether or not it's 15 minutes ahead or 15 minutes behind. Let's take a look at one of the ones that's in the chat. So the first one we've already said thoughts on fire. Fire is going to go up. They trust the market to say that there's $30 million that we just need to buy up, and then fire has $30 million of funding to go towards what it wants to do. Now, if you don't believe in fire, and if you don't believe in the new CEO that I believe it's going into the right direction, don't invest in fire. But I firmly believe that fire is going to 60 because I'm following the pattern of fire. So if you want to look at fire, we have FIRE 2, which is Supreme Cannabis. So you go scroll down, hit chart. Might take a little while. Here we go. So anyone who's teaching you to read charts that starts with bar charts, or anyone that you see on Twitter who talks about an MPAC or any of these terms, these people are over diluting or overcomplicating the information they're giving you. I'm not saying all people are doing this, but most people who talk about too many terms all at once and cannot communicate it into exactly why a stock is going up and why a stock is going down, and they want to look at the bar charts and the candlesticks and all of these things. It's purposely to make you dependent on their calls because they make it harder for you to understand. So if you don't understand somebody's research, but you see a lot of comments with rocket ship emojis, don't invest. And I know I'm preaching to the choir here because most of the people who follow me kind of understand that my mentality is, investing in this way. But look, we have the news, building safer. Okay, so this is not there. So I'm going to go to another resource that I have that's 100% free, wallmine.com. So we're covering stock research as well as chart reading right away. Make starter investments, whatever. I don't need to sign up. I just need to search for this ticker symbol. So FIRE.2. Here we go. Supreme Cannabis. It's got all of this fancy bar charts. It's got all of the news. Wednesday, February 17th. IRSA trade resumption on fire. So that's February 2021. So that's not relevant, but we still have more news that should be recent. And I have shared sources, and we'll share sources in the description and in the comments of this video once it finally gets uploaded afterwards. I only have 1 hour left, so let's start reading charts. So when I read charts, I don't need these moving averages right now. You can look at this on Yahoo Finance, and this is exactly what you see on your Wealthsimple as well. On Wealthsimple, it's even easier because you can look at the exact profit it's made in 5 days, the exact profits it's made in 1 month. And if you look at the 1 month chart, it doesn't look very pretty because it's gone down. But that's because of the $30 million that have been added to share price, that has been added to the market cap of the stock. They've added $30 million. They say, hey, everyone here, we trust retail investors. We don't need a brokered partnership. All we're going to do is release positive news that gets people to buy this stock. And once we have that $30 million, an FTM it's straight to the market price. So there's not a limited number of shares. There's a finite number of shares that is limited to the 30 million that they need to cover. And then that covers the 30 million market cap that is added. because it creates that round number. So if fire is at 30 cents, we need 300 million shares bought. The volume on fire, you've got a few sells, a few buys. It doesn't seem like much, but there's a lot of people holding. And once they do get the 30 million, regardless of how long it takes, it will get its own action. So the main thing we want to see when we're looking at, that's the 1-day chart. So let's go to 3 months, 6 months, because I've been following this since it was at 16 cents. So the only thing that you need on this chart is the one that Yahoo Finance gives you right away. So the indicator that is automatically put into moving average is purple, 50-day moving average. If the stock is below this, if the stock price, which is this blue line, is above this purple line, that means the 50-day moving average is the average stock price total between all buys and sells that have been bought within the last 50 days. The stock price is entirely due to buys that are happening this minute, buys that are happening in right now, news that's causing the evaluation of the stock to soar up, whatever it is, it's causing that. But this 50-day moving average is the average of every buy and sell on the stock market that is, registered to be here. It is not the average of the stock in general, because anyone who's holding is not part of this moving average, because it's only the buys and sells. That's why it says that it's moving. So once this 50-day moving average is above the stock, so once it crosses through the stock line and this 50-day moving average is above, that means anyone who bought within the last 50 days is no longer in profit, because they bought higher on average within the last 50 days than the stock is currently worth. So that means we're going to go down, because regardless of how you think a stock is going to go up, if most people are losing, they're going to sell before they have a loss, because people have this mentality to buy the dip. But if you don't know how far that dip is going down, why don't you sell at a slight loss and then buy back at the farthest dip that you find? Instead of averaging down, why not sell now, wait for a dip, and you have the same money that you sold at a lower average than you started with more shares for the same amount of money. It sounds difficult, but if you have a loss and you have the start of a loss and it doesn't look like there's an upswing, sell. So if we look right here, it is not difficult, because people try to overcomplicate with bar charts. They try to overcomplicate with news. They try to overcomplicate with emojis and exclamation points and calls to action that tell you to buy a stock. Don't listen to it. Before you invest in a stock, just look here. It's, a quick search on Yahoo Finance. You can have the app. It's even quicker. Don't worry about bar charts. Just look at the 50-day moving average. If the farther the stock price is above the 50-day moving average, the more overvalued the stock is. And the farther below the 50-day moving average, the farther this stock has to fall. So the 50-day moving average, when this purple line crosses through from underneath the stock, that means the people who bought within the last 50 days are no longer in profit, so that they're selling. Now, you can notice a pattern here, even if I'm not highlighting it. But if you notice, when we have upswings are happening when this purple 50 line of the moving average lines up with a support. A support is when the stock just goes down and rebounds. People talk about supports as if supports are sure things. Yes, they can be, because if you look at fire, every cannabis stock, if you look at it, it had these huge evaluations right away, and then it went all the way down. Every cannabis stock looks like this because, hey, look, Canada, You're allowed to have pot now. Okay, cool. Let's start a bunch of pot companies. Great. And then hype. And then the government releases the law and they realize, oh shit, we're not allowed to grow as many plants. There's a lot of regulations. Now there's a monopoly on whether or not we can produce plants. Different municipalities still have some regulations that are different. There's a lot of paperwork, and oh no, it's going to cross through. Every time this moving average crosses through from underneath the stock, oh boy, look at all the dips. Only when it starts to line up, it crosses through, but it crosses through again, look, more dips, right? There's only raises when it comes through. We'll zoom in here. When this moving average, there wasn't a 50-day moving average here because there wasn't 50 days yet. But then the 50-day moving average starts here. It's below the stock. The stock is going up, but the farther the stock is away from the 50-day moving average. These people who bought within the last 50 days, the people who are holding right here, they're in the most profit they've ever been in since they bought in the last 50 days. So regardless of whether or not you think everyone's going to hold, regardless of whether or not you think that this stock is only going to go up, if on average every person who bought within the last 50 days is in an extreme profit, a difference of, if you click here, you'll see this purple. If I highlight this line over here, it'll tell me the moving average price at that exact moment. So scroll up so you can see that. So the price of the stock right now is at 620 or 1.62. Then down here, the moving average, you can see in the top left corner, 1.27. So on average, every person who bought within the last 50 days bought it at 1.27 and are currently in profit all the way up to 1.62. That is, a 30% profit or more. I'm not doing calculations very well. It's a little bit under 30. But who wouldn't sell with a 30% profit? People who think it's going to go up. And of course it did, but it came down first. And it only went up when the support lined up with the moving average. And then it started to go up again. But even here, it had these big spikes, which were probably news that happened in 2017, after legalization. But the moving average still had so many people who bought way too low. So if you're about to buy in and you see that everyone in the last 50 days has bought much lower than you have, because if you were to buy in now, everyone else paid $1.66 for your stock. If you look in the purple number in the corner of that screen. But the price is at $29. So why would you buy stocks if everyone invested in this has a way better average than you on average? Because there's still plenty of people who buy. Because you can look at the volume indicators down here where this peak is. There was a lot of buys. These green and red lines, that's the volume indicators. There's reason for them to be green, reason for them to be red. The only reason you need to know is green is buy, red is sell. So we had a very big green line. This is similar to the green candles when you look at candle charts, but the problem with candle charts is it takes all of the information that is, this volume meter and a few other things, and puts it all together in one chart, which you really don't need. So there was a ton of people who bought at the peak, which is a good sign if you're in an accumulation phase or in a bear market. But if you're buying at peaks here, then these people who bought at the peak, the reason this moving average has started to come and cross through underneath this stock is because all of these people who bought right at this time and bought at the exact peak. We have, on average, everyone who had originally bought in at this point got in at 1.73 and it hit its peak, but there was a huge volume of people who bought at 1.73. And it's currently, that's the average of 1.73. But now there's a huge amount. The highest candle that we ever had, the highest volume buy that we ever had was at this high price of $3.28.5. So this company is capable of going to $3.28.5. However, because we had a huge buy here, that raises the 50-day moving average because most people bought at way overvalued at 3.285. So this raises the moving average to be above the price of the stock, as most of the people who bought in down here at 1.71 moving average and 1.71, they're still making almost a full 100% profit. So people are going to sell. No matter how high you think the stock will go, someone else is selling. And the moment you see a moving average about to cross over, you know you should be selling. Now, the 50-day moving average is not the most accurate in this sense, and I will go over the rest of the moving averages, and I'll create a crib sheet on the Discord for you to join. But this volume buy, because if you see volume on Wealthsimple, you just see volume. Volume includes both buys and sells. So if you have high volume in a stock, it could just be everyone selling a stock. You need to go to a site like Yahoo Finance or anywhere else that you can get your free information and know that these buys are happening and that high volume is either buys or sells. You can look at buys and sells instantly with these charts that are happening in real time when the market is open. Because a lot of people like to read past charts and say that they've bought at specific times. And when you look at the chart now retrospectively, you'll say that, oh, I'll buy here and I'll sell here, and it's simple. But if you buy here and sell here in real life, then you'd be a millionaire, no problem. And these courses that people are selling, they would be millionaires and they wouldn't need to sell a course. But regardless of those facts, you should just look at CoffeeZilla, who understands the psychology that goes into those scams. I can talk more about those scams all day long because there's millions of people just like me who, to many people on Facebook, I'm essentially a market messiah because they don't understand how the stock market works. I really don't think I have any sway in what the market does. What I'm doing is not magic. It's just practical, quantifiable analysis plus the psychology of market of the market, because I just looking at moving averages. These are the averages of people who bought the stock. So if you look, most everyone is in profit, most everyone's going to sell. And now that there was a ton of people who bought at this exact peak and the moving average went up so high because of that buyout, that the moving average is high above, because the people selling also increase the moving average, because selling at $20 and buying at $20 is still creating an average of $20. It's not a positive and negative thing. It's just all of the buys and sells added together, divided by however many transactions within that day. That creates the stock price that is the average. So this moving average comes up over the stock, which means everyone who's bought the stock on average within the last 50 days is now losing money. So regardless of whether or not you think the stock is going up, a majority of people are going to sell because almost everyone in the last 50 days is no longer in profit. So that's when these dips happen. Zoom out. Every time this 50-day moving average moves through from underneath the stock, there's a dip, there's a dip, there's a dip, there's a big dip, because this moving average is still above the price of the stock, and it didn't go below for quite some time until it started to line up. Now, this is fire. So if you're saying, oh, fire's not doing anything, fire's doing a lot, because what we're looking at is the last 3 months when I started following fire, right? So I started following fire right about here, down at 13 cents. I saw it go up 15, 16. So I was like, okay, paid attention to the news, and I saw that there were stocks being bought down at 13. So if you go to fire warrant buys, because you might not be able to find the news on fire on Walmart, but look at this. I know this might be something you really might sound condescending, but Supreme Cannabis, all stocks Supreme Cannabis. They all have public websites that they're required by law to have a website where they have their ticker symbol visible and they have investor information. So on Wealthsimple, there's only one Fire stock, but because of the FTMs, the market buys, the warrant buys, there might be multiple Fire stocks on your charts if you're trading with Wealthsimple, right? So they've got bands, they've got 7 Acres, they've got Belisco, Sugarleaf, Highway. You can look at all these companies that work underneath Supreme Cannabis. So you might not know Supreme Cannabis, but maybe you know these. So operations, brands, but over here it says investors. If you are an investor, or if you just want to know more about the stocks, it's got quarterly earnings. This is a very good website that they've created. Some websites are, dinosaurs that need to be updated, but most new stocks or most trendy stocks have a very user-friendly website. So it makes it easier for people to understand the news. And look, I just got a pop-up ad that I could be on an email list to make sure I get all of the relevant news for Fire. So if you're following Fire, sign up for that email list because you put your money into Fire and you're believing that that money is going to be used properly by Fire. Fire purposely put $30 million and says, my company is worth $30 million more than my current market cap. So I'm going to let the public have $30 million worth of shares, which releasing that onto the market caused the stock to go down. So we've got currently quarterly earnings, press releases. Let's go with press releases. Supreme Cannabis launches Sugarleaf THC gummies March 8th. I got a lot of people sending me this, and they were wondering why Fire wasn't going up. Just because there's good news does not mean a stock is going up, because we have the at-market equity program. Supreme Cannabis announces closing of $2.5 million bot deal offering, including full exercise of overall allotment options. So this is February 19th, 2021. So that's an important date. So before we go into further research, let's see. February 28th, 2021. So we've got February. Oh, look. This is January 1st, 28. Boom. It went up, right? And February 28th, what happened? Let's see. I know my screen sharing window is here. So let's just 2021, 02, 09, January, February is the second one, 10. So the market deal that has here, this announces the closing of this deal. So this on the 19th of February, 2021, Supreme Cannabis announced the closing of its previously announced bot deal. So the bot deal is the offering of 83,490 units of the company. It's units until they are bought and become shares, but they're not converted to shares entirely until this deal has come through. But every unit that is bought still reflects the average of the stock on the stock market, because this is the insider trading that people claim is going to, kill you in the market. There's this us versus them mentality of hedge funds versus people, which is entirely toxic. And you don't need to listen to anyone who says, the hedge funds. And I know I've made posts saying about these meme stocks. I've said one thing and I've said another, because there have been times when hedge funds, specific individual funds, were being, mean to a stock by betting it to go down, and people retaliated by buying that stock, and eventually, GME went up. That doesn't really matter. We're not talking about short squeezes. We're talking about what a warrant share is. So I'm sorry for going off on tangents, but this warrant buy exercises a 0.40 cents per warrant share, subject to adjustment in certain events. So February 19th, 2024, the exercise price was complete. All of these stocks were bought at 40 cents per warrant share. So if we look at what the price was when it shot up, before February 28th, when that happened, it shot up here on, I'm sorry, I can't go full screen, shot up and hit its peak on the 11th. And then they announced the warrant buys, which had an investment company that finished buying all of its units and completed the stock. But that averaged down all of it from this huge peak that will be, let's just zoom out. Yeah, so this huge peak that went all the way up to 50 cents, they had warrant buys for 40 cents. So of course the stock has panic sellers that are selling right here at this peak, plus the averaging down that happened all the way leading up to 28th when all of those shares are bought. So February 2nd, so the second month, 12, and then once we get to 28th, we have, takes one final dip after these buys and all of the non-serious buyers are taken off, and then look, it's starting to go up. But if you look into the price action of this, it might not look as tantalizing. So what do I mean by that? That means if we're just looking at the 50-day moving average, yeah, it's a very good gauge for if you want to invest in a stock, go to the 5 days, go to the 1 day, because you're on Wealth Simple. Here on Fire, what you're looking for is you want this moving average to be in between the support and the resistance, because this is an accumulation phase where something is happening, which in this case is the warrant buy, is the FTM, which is $30 million that the market has to buy up. Even though they have good news, this moving average is perfectly in between every single support and resistance. It's a very small changes. And of course, the trading was suspended partway through, possibly. So we're going through up and down, but this moving average is perfectly in between the support and resistance. So the support is just where it goes down and where it recovers. What you want is that in the middle, and it's going to go up when it lines up with these lines of support. So tomorrow, Fire is going to be up because this is a line of support that goes straight to the line of support. So the line of support that lines up directly with the moving average. That is the beginning of these huge runs, is when the 50-day moving average lines up with a big line of support. So if we go 6 months, look down here, 50-day moving average perfectly lines up with a support. Huge run because of good news or because of a lot of buys. Sell-offs, of course, everyone sells when they're in profit, but except for the people who, don't know how much profit they're about to lose. And then you come in here, it came down, it met up, big movement, came down, it was going down for a significant portion of time. It crossed through this break. Before it crossed through from underneath the stock, it had this meetup, which caused a spike, went straight through the bottom, went down, went underneath, straight through the bottom and up. But if we have these flat lines where we have a stock accumulating, this is when people are buying to the point where we have a perfect moving average that represents the stock. So if we zoom in to the last day of the market, we are in a phase where the 50-day moving average is essentially the exact price of the stock. So within the last 50 days, everyone who bought within the last 50 days is in the same boat as the people who are buying right now, which is fantastic because everyone's in the same boat. Everyone's ready to ride this profit because everyone who invested in the last 50 days is in profit. There isn't much percentage drop or gain in the last 50 days, even though it might seem like it because of, 1 cent is a big difference in a 28-cent stock. But what's going to be a big difference is when it goes up to 50 again and when it goes up to 60 again, because Supreme Cannabis has done these unit buys that happened in February 28th. So these average down the stock, but they give the company $25 million once these units are sold and averaging down the stock, because these stocks are bought over time. So within the next 3-month period, this $25 million was slowly given to Supreme Cannabis, not because the holding company couldn't give $25 million right away. It's so investors don't get scared off by $25 million being bought at a lower price than the current price of the stock. But no matter what happens, nobody has $25 million to invest in Supreme right away. That's why they're going to these companies that say, here is my exact pitch. Here is what I want from you. And here's why I believe that my company is worth $25 million more than it currently is. So you're going to buy these stocks that we are creating to increase the value of our stock. And you can promise to hold for 3 years. And we can promise you that within 3 years, this stock is going to be much higher. So these warrant buys show that a holding company has confidence in Supreme. The FTM, where it just adds $30 million to the stock market, and this means Supreme Cannabis trusts its buyers. It trusts the people buying the stock. That means that it trusts individuals who like fire cannabis and who have done their research and understand that Supreme Cannabis not only has had an upgrade in its own branding and online retailers and has acquired new licensing and is capable of creating, very good gummies. Not to say that I've tried them, but I'm saying I have, testimonials from people who have. Cannabis expands 7 acres into new markets, December 28th, 2019. Supreme Cannabis launches Sugarleaf by 7AC, an exciting addition to the premium cannabis brand portfolio. So Supreme is trying to have a luxury brand similar to the brand names. UXLY is another one that's, it's supposed to be luxury brand, but Supreme is becoming a luxury brand. There is no doubt in my mind that Supreme Cannabis is now labeled as Supreme, and there is also a hype brand that is involved with Supreme. I'm not saying that, they're going to start printing red labels with white letters, and they're not going to sell bricks that say Supreme on it. But it's a pretty trendy market decision to have. And it's had appoints Fowler president and director. So if we go to 2020 announces financial results. First quarter highlights: positive adjusted of 0.35, 24% net revenue growth quarter over quarter. So in the last quarter, they've gotten 24% more growth than the quarter before. 45 active retail SKUs with presence in all 10 provinces. All 10 provinces of Canada have some form of SKU, which is a SKU. If you've ever worked in retail, the little number on the bottom of the barcode, to my understanding, I could be wrong. If you want to correct me in the comments, I'm not looking at those because I'm doing research right now. They have sales in every province in Canada. Complete third shipment of medical cannabis to Israel through its Truvera brand. Now, I might be Truvera, sorry. Maintain a strong liquidity position, including cash balance of $20 million. Now, a cash balance for a lot of more established stocks can be a warning sign, because a cash balance shows uncertainty. But for a stock that is brand new and has a very low market cap, having a cash position is a very good negotiating point, and it allows them to move in on these plans that they're going for. That $20 million cash position is looking fairly nice. November 16th, 2020, Supreme Cannabis Company today announced its financial and operating results. So this is just all this stuff that you can find on a very trendy website that makes it very easy to invest. And studies have shown that companies that have ticker symbols that you can read as words are easier to invest in. Andre Jick does a video about that where he talks about, the best performing automotive stock is one that's called Cars. Don't quote me on that, but you can watch one of his videos because I don't want to steal from him. Anyway, I'm going to go back to the comments and see New comments. Let's scroll all the way down. Thank you for all your hard work and research. I made profits on my small investment on Mogo, Hut, and Hive because of you. Thank you so much. And I'm glad that you believe so. Jen, hey, I'll go into my Discord because I know I'm supposed to prioritize the Discord, and I know the VIP section is not happening here. What to expect from CSTR going forward? So as I established on Wednesday, because I know I wasn't talking today because, of course, we had floods in my residential building that I manage. Once again, I am closing this down in 30 minutes. So anyway, so DK asks what to expect from CSTR going forward. So if you don't have access to the VIP Patreon, just send me a message on Patreon. Actually, I can make a post. Yeah, I think you have to send me a message on Patreon, and I will send you the Discord link directly in the private message. So then it will give you access to the VIP. Now, when you are, am I sharing this application window? So those of you who are commenting here, okay. So I'm going to share my Discord screen so I can show you how to use Discord later. But when it comes to Cryptostar, so I can talk all day about what to expect from Cryptostar, but let's just read the chart, and I'll go into more Cryptostar Corp right here. So I'm going to go into slightly more advanced chart rating here because this is what I use. It's not very advanced. It's just where things are. So we had a big drop-off point here, and that's fine. This happens. It's a cryptocurrency company that is not mining cryptocurrency directly. So it's following a similar pattern to BitK. So I'm just going to open this tab, go to Yahoo Finance again, so we can do a direct comparison. BitK, which is not a crypto mining company. It is a blockchain K2. It's a company that creates tokenized assets. This is essentially, if you hear of Amazon creating blockchain technology, they're outsourcing that technology to a company like Blockchain K2 because they understand, because Blockchain K2 understands the ledger and blockchain technology. So the problem with most retail investors is that they don't know that BitK is, BitK.v. People don't understand that just because a stock has the word blockchain in it or has a description that has to do with cryptocurrency does not mean that it's mining a stock that will go up and have infinite upside like people believe Ethereum has. So we have all of this going on. But what I want to look at with BitK, because BitK was one of the first things that I called on the Facebook page that people did lose money on, because I said, I'm going to set my limit sell for, a 40% profit or 20% profit, because it was one of those days where within the morning, let's see, April, May, June, July, 2021. So this was, I think, November. Yeah. So we had this peak that lasted just one day, I believe. No, there was one peak at some point. I can backlog through my Facebook and pull that up if you really want me to, where I called BitK at night and, overnight it went up from, let's just say 36 cents to 80 cents within, a morning. I was up, I sold, and then, of course, that post didn't age well because anyone who bought after I posted about BitK and, saw the post late, they probably bought up here. So BitK is following the same. So BitK is following a great pattern of accumulation back here that has a bottom line from the company's creation, where we have a lot of this price action where the resistance, which is the top end, I like to call it peaks and valleys, because when people say resistance, when they're overcomplicating stocks, resistance is just, there's a lot of resistance here because more people are selling there than there is buying. So it's much harder for the stock to go up, because at points like this, most people who bought are in profit. So most people are selling. and it points here, the valleys, so peaks up here, valleys down here. Resistance is when people sell. Support is when people buy. It's just the points where we assume that most people will be buying, so then we get a positive price action. Resistance is not solid. Resistance has validity, and the chart reading that I do in order to create validity within the stock market, because you see BitK started and open here and just waterfalled. So I'm just going to show you Cryptostar. Where do you see the same waterfall pattern and same sideways motion afterwards? BitK, it started a little bit later. Crypto, very similar. So it will get even more similar once we start adding this more advanced moving averages. When I say advanced, all it is a simple color coding. You can use this as a crib sheet. I'll post it in the Discord. I'll make sure. So you go into indicators, moving average. I go 5-day moving average. Don't care about the field. Don't care about the type. It's simple, field close, but I make sure this is red. No, not 55, 5. So this here, 5 moving average, red, save. Indicator, moving average, 10, yellow. If you're following along with this tutorial, use this color-coded system. Not because this is the ideal way to read charts. This is just how I primarily do it, and it's the most straightforward, easy to comprehend way to read charts without having to worry about what bar charts are doing or all of this other stuff. So don't worry about MPAC. Don't worry about all of these things. You can tell if a stock is over or undervalued just by looking at the market, just looking at the 50-day moving average, and then you can just log into Yahoo Finance. Doesn't matter if it's 15 minutes off. So it is simple. You can just take a look, realize, oh shit, okay, the stock is way above the moving average, so it's probably going to cross over, and if I buy now, I have a huge risk of losing my money. But now that we have the 5, the 10, and the 20 is going to be green. So to reiterate, we've got the green stock is the 5-day moving average. The yellow stock line is the 10-day moving average, and then the 20-day moving average is green. So I'm going to go to a stock that is more predictable than this, because I don't really care about what stock we're analyzing. I'm just showing you the best ones to analyze. So I'm going to go hpq.v because this is a silicone company. Silicone is important to electric vehicles because of the chip shortage. You know, silicone is being used not just for spatulas, but it's using for microchips and all of these things. Normally, I would be much more comedic, but this is a very serious call. Because I have too many people who come to me and say, you know, what are all these things mean? What bar chart should I be using? Where should I be getting my second tier data? Like, should I be paying for all of these subscription services to allow me to have chart reading technology? It does not matter. All you need is to look at a stock. So we're going to go into the 5-day because it's very easy to see. So what we need to understand is the red here is the closest to the stock, because this is everyone who's bought within the last 5 days. So it makes sense that within the average of all the buys and sells within the last 5 days should be closest to the stock. And we're following the same principles as we did with the 50-day moving average, where we can bring that back just for a second, but I don't want to overcomplicate it. It's the same thing here, where if the 50-day moving average is below, the farther below, the more overvalued the stock is. So if we have this moving average catching up, then we know that this stock will have a dip, but the moving average is at least catching up to a point where it could recover. But we're not going to look at the 50-day moving average. Sorry about the echo that was just happening. I was talking in the wrong part of my microphone. So I'm just going to X out of this purple one, because the reason I color code it red, green, and yellow is every time the red passes through above, because what I'm saying here when I say above and below, it's just the moving average is either above the stock or it's below the stock. We'll get into crossovers in a minute. But if the red crosses through from below the stock to above the stock, so we'll go zoom in, enhance. Oh, what happened here? Enhance. So we have the red line crosses through. So when every person who's bought within the last 5 days, now that they've paid right here up in the corner, it tells me the moving average. So right here, the moving average is 1.22. And the people here, the moving average is 1.22 up in the right corner for the 5-day moving, up in the left corner for the 5-day moving average, 1.22. And oh, look, the price of the stock is 1.21. Seems like, not a huge difference. But the moment this red line moves through, that's the first sign that there's going to be a problem. It's the first sign that it's going to go down, and it will go down because as rational as you think you are and as good as you think the stock will do, if you see the red line go through from the bottom of the stock to above the stock, then you know that is going to go down, even if it's temporary. If we have the red line crossing underneath, it will be a small downturn. And then if this yellow line, which is the 20-day moving average, which means all of the people who bought in the last 20 days, if that crosses through, then oh no, all the people in the last 5 days and all the people in the last 20 days are no longer in profit. So most people will not panic sell. They're selling to make sure that they don't get the further losses. Because the problem is, if this green line crosses through the stock, that means everyone who did it in the last 20 days is no longer in profit. So there's going to be even more selling. Now, I'm not trying to speak in a tone that's causing any problems here, but I'll show you. Let's look at this peak. What happened here? Well, the reason that I color this red, yellow, and green is green means go, red means stop. If red is on top, you got to stop. What you want is a perfect area where we've got green, low, yellow in between, and red and right there. So every time that we've had a raise in this stock, it's been green down here, yellow in the middle, red on top. When we've had uncertainty, we've had crossovers. So these crossovers were created by these moving averages lining up. This is what I call like an accumulation phase where the averages are right in between the support and the resistance. But the problem is you can't tell right here whether the stock is going up or down unless you look at these ribbons. Or the ribbon is a term that refers to a grouping of moving averages. So if you have multiple moving averages and they line up like this, it looks like a ribbon. But if we enhance, you can look at all of these crossovers. Crossovers you don't have to worry about. What you need to know is if green, then yellow, then red, that means that the stock is going up. But you want to know that the green, red, and yellow are about to cross over for it to go up. Because the farther away the moving average is below the stock, the more overvalued the stock is. So what you want to be able to look at is the crossovers that are happening here. Because what we see here, if you're paying attention to the stock, even if you're 15 minutes behind, this, let's see, 3:50 p.m., 9:30 p.m., even 15 minutes, you still got some time to buy this. Now, I'm not advising buying the moment you see this crossover, but every time there's been a significant upswing, it's because both the 5-day moving average, they're in profit. The 10-day moving average, they're in profit. Everyone who's bought in 5 days is in profit. Everyone who's bought in 10 days is in profit. And everyone who bought in 20 days is in profit. And with this lineup, we have the people who bought in the last 5 days are in less profit than the people who bought in 10 days, who are in less profit than the people who bought in 20 days. And if we add in any indicator we want for moving average, if we want to add in the 50, you'll see again, it's even farther down because this hasn't even crossed over. It's always been low. So this is a good sign that the stock has a bottom line. It has a support because we have a stock that hasn't crossed over. We know we are in trouble when the 50-day moving average or when the green line goes on top, right? Because whenever the red line goes above, so the red line here crosses from underneath and goes above the stock, there's going to be a dip. If the yellow line goes above as well and it crosses above the red, then it's going to be a bigger dip. And if green comes on top, it's going to be a huge dip. So I'll get rid of this purple because I like the red, green, and yellow color scheme. Because here, what's good is what you want is to see the crossovers happening before they happen. So you've done a connect the dots. This is essentially a connect the dots. If you look at the moving average, you can look how the stock is going up and down. You can look at the volume to say, oh, there's a bunch of buys here. So the moving average should be going up. So this is the 5-day moving average that's going to go up first. And then they line up and we have this crossover here where this green line snuck up underneath and went below the stock line. So the stock line is the blue line. And then the yellow and the red, it's all just moving averages. So all the people who bought within the last 5 days is red, 10 days is yellow, 20 days is green. So what we want is it to cross over to go up. And what we want to pay attention to is the opposite, where when this stock is about to go down, you know you really messed up if you buy a stock and you look at, oh man, I hate this sometimes. Let's go to 1 day and refresh. So you know you really messed up when you have green on top, yellow in the middle, and red on bottom, because that means the people who bought 20 days ago are in less profit than are in more people who, if you have any stock above any moving average, if you have any moving average above the stock line. Sorry, I need to adjust my microphone. It's a little bit tired. It's almost 10 p.m. I've got 10 minutes left. So I'm just covering moving averages because this will make you an infinitely better trader simply because before you buy into hype, just take a look at the 50-day moving average. You don't have to pay attention to these color coding. Just pay attention to the 50-day moving average. And if it's lower than the stock, then you know that this stock is overvalued. And if the moving average is above the stock, then you know that it has room to go down. But once you get to this color coding, it's very simple to say you want red, then yellow, then green. And if you have green, then yellow, then red, then you know that it's going down, right? We have these huge waterfalls because this is a crossover that happened where all throughout this rise, regardless of the volatility of this rise, for the most part, it's this major crossover happened. So if I go down here, this crossover happened. This support line or this bottom line here lined up with most of our moving averages. This cross happened that caused red to be here, yellow to be in between, and then green on bottom. So if you see green down low, and the farther it is from the stock, the higher the evaluation of the stock, which is bad. But if you see green, yellow, and red neck and neck, but still perfectly in between each other, then you're going to have a much more stable run like this. It goes up, 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 up. And then there's some sort of news or problems that happen, or some sort of positive price action that causes this to go up. And if you look at the volume indicator, there's a big buy right here. And then you can look at this, and this is really funny if you take a look at it from the perspective that these are all human beings. Because these market shares, take a look at this. Don't say moving averages. Don't state statistics and add numbers. And don't pay attention to the people who try to overcomplicate information before you go into it. If you start reading stocks with the bar charts and all of this MPAC, all of this stuff, all of these acronyms, Like I've said before, I didn't even know what the word DD meant until I started into these Facebook pages. Don't be intimidated by learning, and don't take everything and try to learn it all at once. Don't try to reverse engineer the most complicated way to understand the stock market. Before you even go with moving averages, just look at the patterns and see if you can evaluate the patterns. Use a paper trading app like RBC or Webull, because even if you're a Canadian, you can use the paper trading app on Webull, and you can play with $1 million fake dollars and turn it into 1.2 million fake dollars or $5,000 at whatever you want. So here, if you're playing with your own money, pay attention to moving averages, because this is a very stable rise because the moving averages are close together. So the people who bought 5 days ago are in a similar boat to the people who bought 10 days ago, and there's a similar boat to people who bought 20 days ago. On average, all of these people are watching this rise, and none of them are in a significant amount of loss on average. But then we have a huge buy in comparison to all of these, where there's some sort of hype, some sort of news, maybe the day before. So we've got right here a huge spike. And then that spike of this buy raised the moving averages way too quickly. So this big buy, of course, it first affected the 5-day moving average, because this buy that happened today or at that day caused the 5-day to move up first. And then this average was calculated into the 10-day, because this buy, in perspective to an average, is lower on the 10-day. So all of these people who bought at 5 days from then, 10 days from then, 20 days from then, we have red peeking through, which is the first sign of a dip. And if you see that the red line here is about to go through the stock, sell. Because if it's about to go through the stock, that is your first sign that the stock is going to go down. And if you see that the yellow is about to cross through, that's even a worse sign that the stock is going to go down. Because now you have everyone who bought in the last 5 days is currently no longer in profit. Everyone who bought in the last 10 days is currently no longer in profit. And then everyone who bought in the last 20 days is currently no longer in profit. So everyone here is losing. And if you look at all the people who bought here, took this rise, there's barely any buys or sells right here at this peak. So don't feel bad about selling at a loss, because there's a higher amount of sells at this moment and this moment here, then it trumps this entire buy that happened here and this buy here. All of these people, the average of the entirety of all of the buys and sells on the stock market, average, a lot of these people are selling at the significant loss right here. So it shook out all the people who panic sold. And then we've got the red 5-day moving average going below and coming up. Now, I would love to talk about Twin Peaks, where we have a higher moving average traveling through a stock and then breaking through, because a Twin Peak is this. I'll cover it very quickly before I sign off and look at your messages. But a Twin Peak is here. This is your last chance to buy or last chance to sell before the stock goes down a significant amount. When you see your lowest moving average cross from one edge to the next, you better sell right here, because there's going to be a huge dip, but there's going to be a recovery that's slightly less than this height, where we have green finally crosses above the yellow. So everyone right now, who bought within the last 20 days is in more debt than the people who bought in the last 10 days and the people who bought in the last 5 days. But they're all in debt right now, on average. All of the buys and sells that have happened on the market, people have sold higher than the average and bought lower. So all of these average buys and sells together, every buy and every sell, if somebody buys at $20 and sells at $20, that is still a $20 average. It's not negative plus positive. It's all of them together as your volume. That's your moving average. So we have all of those calculated in. If we scroll out zoom up, or whatever we want to call it, we can look at the price of the moving averages right here. So this is your little recap. Whenever you're looking at this, pay attention to the price of the moving average and see the difference between the stock price and the moving average. So when you're looking at Yahoo Finance, you got simple, just the stock is this blue line, and we want to pay attention to the stock because that is the price that the stock market is trading it at. These averages represent all of the people who've bought and sold a stock within the last 5 days if you have a 5-day moving average, 10 days if you have a 10-day moving average, and 20 days if you have a 20-day moving average. I color this as red, yellow, and green because I like the easiest of red means stop, yellow means slow, green means go. So once we have green down below means go, only when it's just happened, and only if we have yellow in between and red on top. If we have these uncertainties of these crossovers, then it is going to be more turbulent. But if we have these areas where the ribbon of moving averages are very close together and it's very close to the stock market, that means there's more confidence in the market because more people are consistently buying and selling, and they're making an average of the stock market. So right here, we have a lot of people who have bought and sold at the prices very close to the support and resistance, and it's on average great. But there's some sort of news, but in this case, it's not news. It's just a big buy, which doesn't look big now, but if we zoomed in, here you can see a very large buy happened here, which first raised the 5-day moving average because within the last 5 days, this buy is significant. And then within 10 days, it became significant. And then this sell lowered the moving averages extremely quickly because this moving average of the 5-day moving average started to tank the moment this sell happened. And it started to tank before that because there was a small sell right before. And the people paying attention who didn't understand that this twin peak phenomenon is the last call to sell a stock, which I don't want you to use this twin peak analysis until you are comfortable with just understanding that we've got red, yellow, and green. If you see them stacked up below the stock, that means that the stock is going up. But the farther that these moving averages are below the stock, the more overvalued the stock is. So if we go to a stock that has, extreme volatility, BES.V, and we just worry about these moving averages. So right now we have this accumulation phase, which looks nice. And we've got a very stable support and resistance, you might say, because it goes all the way down here, but there's low sells. Well, no, there's a lot of selling happening on this low, which shakes out the people who sell. So if you see a lot of sells on a low and it still recovers, then that means a lot of the people who sell right now probably won't get back into the stock because they've already sold at a loss and they don't want to get back in. So what was I saying here? We were talking about a volatile stock, so we're looking at BES. So what I want to look at is some particular moments in BES's history, right? So all of this time, let's see, this is when it went all the way up to 85 cents. What a great time to be alive. But we see that it's incredibly overvalued because our 20-day moving average is way below the price of the stock. The 20-day, everyone who bought within the last 20 days bought it for 79 cents. I know at this point, yeah. So right here, it's 78.50, and we got 74. But what we want to pay attention to, because once we have a volatile stock, we don't care about any of these moving averages aside from the 50-day moving average. Because the most important thing you need to remember here is when you just want to invest in a stock and if you have no idea, the financials and you don't have time to check, because this is the problem when people promote day trades, the people who see them are like, okay, I have no time to research. This is going to go up in the next 10 seconds. And that is not good. So we have our moving average, 50-day moving average. So in the last 50 days, all of the people who've bought and sold the stock have sold it for a certain price. So without looking at the color coding, this is the simplest way to take a look at a stock and say it's overvalued. Every time the 50-day moving average is below, and the farther the 50-day moving average is below the stock, the more overvalued the stock is. And when the moving average is above the stock, that does not mean it's undervalued. This just means it's not over or undervalued. I'm using the wrong terms here, and I apologize. What is happening is everyone who bought the stock in the last 50 days is in an incredible amount of profit. So if we go here, let's go right here when BES took off a little bit. So we got the moving average is 76 cents and the price is 84 cents. So that is, nearly a 20% profit or more based off of, quick maths, which is probably not accurate. So we have that huge difference in the stock. If you have like a 20% gain, most people are going to sell. I know people are chasing highs and they're looking at people's portfolio, like my buddy Peter, who's turned $1,000 into $13,000. Either way, it's a matter of risk tolerance. If you look at a stock and it's already gone up 20%, look at the risk. If it just went up from here, it went from 83 all the way up to 91 in a split second. That's 10 cents difference from 80 cents. So that is 1/8 of the stock. 1/8 of your investment was earned from 80 to 90. Right here. So that's a huge portion, right? That's 12.5%. No, it's 17.5%. That is a huge percentage gain within an hour. And all these people who paid on average in the last 50 days, people who bought this 50 days ago, even with all of these highs that happened, in the last 50 days, the average was still low enough that these people paid 77 cents and are getting 91 cents. So that is almost a 40% gain from here to here. So regardless of how rational you think your evaluation of the stock is, how sound you think your research is, if you look at the moving average and you see all of these people who bought here, they are currently in profit, then that means that most of these people are going to sell and take their profits. And if these people here are in debt, so they have losses, they're most likely going to sell and take their losses so they don't continue to go down and ride this wave. Because the main problem that people have is not taking profits. There's a lot of people who take profits, and there are a lot of people who get greedy and don't take profits early. I don't like using the word greedy because nobody's greedy. It's just psychology that you say that you believe in a stock enough because a lot of people are telling you that the stock is going up, so you see it going up, and the evaluation might say $60. And you're like, okay, well, I'll wait till $60. But the evaluation is 5 years from now. The small adjustments that are happening right now have nothing to do with this. So I'm going to turn on. Oh, you could see my face this whole time. I had no idea. So I'm going to turn off screen sharing. So I know you're asking thoughts on Hive and all of these things, but I'm just doing chart analysis today. I know I was supposed to answer your questions, but I had some important calls with some people who have been holding the bag, and it's almost entirely due to their fundamental understanding of the stock market is wrong. And in that case, this person believed that the money that you're putting into the stock market is essentially you're betting on the value to go up. They didn't think that the stock can use the money that you put into their stock. the entire stock market that is one single stock, right? If you put money in and 10 of your friends put money in, that is a mutual fund that you're giving to one company to use your money to create value. So you should think of, when you're investing, do you trust this company with your money to make money on it? Because if you have your own business, so if you sell lemonade and you want to expand your lemonade company, and you want to trust your friend to sell lemonade for you, and in this case, you're giving him money to sell your lemonade or to sell his lemonade, right? If you treat these companies as companies that you want to own, treat these companies as companies that you're going to invest in. Like I say with real estate, you want to invest in what you know. This is not my own principle. This is Berkshire Hathaway, Ben Graham, and all of these, investors that I've been reading about recently. I didn't follow their practices before, but I'm just doing my research on investors in history with an audiobook that I shared on my Patreon, and I'll once again link it in the description. So with all of this, I'm really glad that I've cultivated a group of people that is not a cult, that understands the stock market. And slowly, through all of the calls that I have and all of the free resources that I'm giving, like this live session, I want you to not need me anymore. Because, of course, having these live calls with people who are beginners, it's not taxing on me. Because if you feel like you are burdening me by saying that I'm going to move this so I can make a little more eye contact, it's not going to get sensual. It's just going to be me talking to the camera for the last little bit. So sorry about my nostrils. I can hear that too, and I'll try to edit it out in post, but fixing things in post doesn't happen. I really appreciate the community that we've created, and I have seen communities devolve and have people losing money. And I want to tell you that I am confident that you will lose money following my picks, and you will gain money following my picks. But I don't want you to follow my picks. These aren't picks. These aren't calls. These are me sharing my research. Do not go all in because I do research on Mogo and say, I believe Mogo is going to go up here. Just make sure you can do all of this research yourself. What I've been doing all of this night is free resources and the simplest way to understand them. If you come to me asking about trying to understand a bar chart, I don't use candles. I legitimately just use this data. And when I talk about my computers reading data, I don't put candlesticks and all of these red and green charts into my computers to pump out which stocks I want to choose the next day and the next day. It's just a matter of moving averages because it's the easiest way to figure out where supports and resistance are and whether or not a stock is going to go up when the 50-day moving average lines up with the support. It's going to be going up. And the farther it goes away from the moving average itself, the more overvalued the stock is. It's not necessarily overvalued. It's just everyone who's paid for it within the last 50 days paid for it for way less than anyone who's investing right now. So why would you get into a stock if, everyone who's invested in the last 50 days is in a way better position than you? So make sure when you're buying a stock, especially a stock that may not be a hype stock yet, you might see no chatter on it and you might say, no one's talking about the stock, but there's people talking about the stock. You just haven't seen the people talking about it yet. You can't blame yourself for missing a 20% rise in a market of thousands upon thousands of stocks. And you can't blame yourself for taking a little bit of profit right before the thing went up. Take your profits because you want to take profit and you want to make profit. Don't get into the fallacy of, I paid this much for the stock, so this is what the stock is worth. We are in a speculation correction. We went through a Wednesday that was a downturn in the stock market. I haven't checked Wealthsimple at all today because I've had a lot of busyness happening. So me reading the charts today was just reading the aftermath and looking at the questions. And I had a Cryptostar comparison where I wanted to look at If you want to see the price action of where Cryptostar is going, look at BitK. Cryptostar is a company that does not mine cryptocurrency. It creates mining rigs for other people to give Cryptostar money to build a mining rig for them, and they can either have that mining rig for themselves, or Cryptostar charges a management fee for this cryptocurrency mining rig, and you collect the profits. BitK does tokenized assets, so majority of people don't necessarily understand what a tokenized asset is, and I want you to Google that for yourself. I'm already 15 minutes past my bedtime, and I really appreciate what we're doing so far. And in my Discord, you will have a whole host of new moderators in the free section that are coming from the Rags to Riches Discord, which I will link in the description here. I really appreciate everybody who's come and watched, and I'm genuinely surprised that we've been talking for this long, but of course I can talk forever, and I'm just glad I have someone to talk to during this pandemic. Thanks, and goodbye. Good night.